Want to know more about Sersol Berhad, huh?
Sounds like it.
And you've given us their 2024 annual report and corporate governance report. Good choice.
Yeah, these can be tough to get through.
Exactly. But don't worry, that's what we're here for. On the deep dive, we unpack the important stuff and, well, make it make sense.
Break it down.
So buckle up, we're going deep on Sersol.
Let's do it.
Quick reminder, Sersol Berhad is a Malaysian company listed on the ACE market of Bursa Malaysia.
Oh, okay.
They're mainly into management services and investment holding.
Gotcha.
Now, their financials, well, they've had some good times and bad times, and we're going to look at all that.
Great.
Plus their sustainability efforts, especially with all the global economic craziness in 2024.
Makes sense.
Oh, and we'll uncover some interesting things about their corporate governance and leadership. They've had some big changes there lately.
All right, let's dive in.
Okay, first up, the money stuff. Sersol brought in RM 21.9 million in revenue for the financial period ending June 2024. That's up from RM 19.1 million in 2022. Sounds pretty good, right?
Well, on the surface, yeah. But there's a little twist.
Uh-oh, what's that?
They changed their financial year end from December to June.
Oh, I see.
So we're comparing an 18-month period to a 12-month period. Not exactly apples to apples.
Tricky. So how do we actually figure out if this revenue increase is real growth or just an accounting thing?
Yeah, we got to dig deeper into the numbers and see if this revenue bump actually means more profit.
Good point.
Speaking of profit, they did report a loss before tax of RM 12.3 million for that 18-month period.
Okay, so even with the revenue going up, still a loss. Not a great look, is it?
Not ideal, but there is a glimmer of hope. They're cautiously optimistic about the future,
Oh, okay. Why is that?
pointing to some good economic signs in Malaysia and new stimulus measures coming out of China.
Interesting.
They also mentioned taking steps to deal with supply chain problems and rising costs.
Yeah, those were huge headaches for everyone in 2024.
Big time.
It's interesting how they specifically call out China's stimulus package. Does that mean they're like super reliant on the Chinese market?
Good question. The report doesn't say exactly how much they depend on China, but their optimism about those stimulus measures does suggest it's pretty important to them.
Makes sense.
Yeah.
Okay, so we've got this revenue increase that's maybe a bit misleading because of the financial year-end change and a loss, but they're hopeful because of things happening outside their control, like how China's economy performs.
That's a good summary.
Feels like they're walking a tightrope, doesn't it?
You'd get, yeah.
Let's move on to another big thing, sustainability. They seem to be really trying here.
For sure.
They even adopted the IFRS Foundation's International Integrated Reporting Framework.
That's impressive. Shows they're thinking long-term
Okay.
and trying to connect their financials with their, environmental and social impact. It's not just talk.
So you think it's more than just PR. They're actually doing stuff.
Yeah, they're definitely saying all the right things. They talk about things like product quality, customer engagement, employee well-being, environmental management.
Yeah, the buzzwords. But what about actual actions?
They back it up with data. Like, they give you specific numbers on things like water usage reduction, employee turnover.
Okay, that's good. Solid evidence.
Yeah.
But we all know details matter. Speaking of details, one thing that jumps out is that gender imbalance on the board.
Definitely.
It's a little better than before, but still, only 17% female representation.
Yeah, that's a stark figure. Lots of room for improvement there. Be interesting to see what concrete steps they take to address that and promote more gender diversity, especially in those top positions.
Absolutely. Okay, so kind of a mixed bag so far. Some accounting trickery with the revenue, hopes pinned on things outside their control for future profits, but some real effort on sustainability, even though that gender diversity issue needs attention.
Yeah, I agree.
Now, let's get down to the nitty-gritty, their corporate governance. Their corporate governance report, it goes deep on things like board diversity, risk management, whistleblowing policies, all that stuff. Looks pretty thorough, I gotta say.
Yeah.
What are your first impressions of their approach to corporate governance?
Well, they definitely made some big changes at the board level.
How so?
Lots of directors resigned or were removed, and then they brought in new people.
A real shakeup, huh?
Definitely. And then shakeup goes along with their decision to separate the Nomination and Remuneration Committee.
Interesting.
Shows they're really trying to improve their governance practices.
So being proactive about fixing potential problems and strengthening their oversight, but they also changed their external auditors, right?
Yeah.
And that always makes me curious. What's the deal there?
So the new auditors, Morrison LC PLT, they flagged something interesting in their report. Specifically mentioned write-offs of deposits and prepayments made under the previous managing director.
That sounds like a story we need to hear.
For sure.
Yeah, the report kind of hints at some maybe shady stuff going on during that managing director's time.
Right.
The auditors even mentioned looking closely at transactions for irregularities and unauthorized payments.
Yeah. Sounds a bit fishy.
Totally. And they also point out the need to figure out if the new board members are, competent and independent.
Right. Seems like they're trying to rebuild trust after what might have been a really messy period.
Trying to turn over a new leaf, I guess.
Yeah.
Let's take a closer look at some of these new faces on the board.
Okay.
We see To Boon Hasing joining as an executive director in 2024, and Alan Ling Sai Kyung becoming a non-executive director in 2023.
Right.
What's interesting is neither of them have ever been directors in public companies before.
That's interesting. Could be part of a plan to bring in fresh ideas and shake things up.
Right.
Or maybe it's just, how things worked out.
Adds another layer of intrigue, doesn't it?
It does.
Okay, so board shakeup, possible shady dealings in the past, and new players with no experience in public companies.
Yep.
Let's get back to their sustainability efforts for a sec.
Sure.
They really emphasize product quality and compliance. What do you make of that?
It seems like they understand that sustainability isn't just about the environment. It's also about, having good products and doing things ethically.
They're not just slapping a green label on everything and calling it a day.
Exactly. They're actually integrating sustainability into how they work and how they develop their products.
A more holistic approach.
That's the word. And they're not just relying on their internal teams to drive this change either.
Oh, so who else is involved?
They talk about significant board involvement in, shaping and overseeing their sustainability strategy.
Okay, so it's not just a grassroots thing. They've got support from the top. But how does this board involvement actually work in practice?
Well, they've laid out a structured governance framework to make sure their sustainability efforts actually line up with their business goals and are implemented effectively across the whole organization.
So they have a framework. Good. But what are the nuts and bolts of this framework? What are they focusing on to make this sustainability thing happen?
They've got 5 key pillars to support this whole sustainability push.
5 pillars, huh? What's the first one?
First up is enhancing corporate value.
Yep.
So basically making sure all the sustainability stuff they do actually helps them achieve their business goals and, be successful in the long run.
Makes sense.
They emphasize the board's role in, making sure everything is on track and aligned. The second pillar is all about stakeholder engagement.
Okay.
They realize how important it is to talk openly with their investors, employees, customers, the whole community,
Right.
and to be transparent about their sustainability journey.
So it's not enough to just do good. You got to be seen doing good too.
Exactly.
But actions speak louder than words.
Yeah.
What are they actually doing to involve their stakeholders in all of this?
They mention giving regular updates on their sustainability performance, getting feedback from stakeholders, and, actually addressing concerns that are raised.
Okay, sounds promising. On to the third pillar, risk management and strategies. Big one, especially with all the global uncertainty in 2024. How are they handling risk in the context of, sustainability?
They're building risk management right into their business planning.
Okay.
Emphasize the importance of, regular risk assessments to figure out what environmental, social, and governance risks might pop up, and then come up with strategies to deal with them.
So being proactive.
Exactly. Anticipating problems instead of just reacting when they happen.
Smart. What's the fourth pillar?
That one's all about compliance and actually putting policies into practice.
Okay.
They're really committed to doing things ethically and following all the rules, laws, regulations, best practices. They really want their operations to be squeaky clean.
Compliance can sometimes feel like just checking boxes, but it sounds like they're going beyond that.
Yeah.
Any concrete examples of how they're making sure they're actually meeting these standards?
Yeah, they mention having solid code of conduct, strict policies against bribery and corruption, and they do regular training for employees to really drill these principles in.
Okay, so baking ethics and compliance right into the company culture.
Exactly.
Now, the fifth and final pillar, the grand finale of this sustainability framework. What is it?
It's all about having an ethical management philosophy.
Okay.
They believe that ethical behavior starts at the top and, spreads throughout the organization. They really highlight leadership commitment and stakeholder engagement as the key drivers of ethical behavior.
So walking the talk, creating a culture of integrity. How do they actually measure if this philosophy is working? Do they track anything specific?
The report doesn't get into specific metrics, but they do mention doing regular ethics audits and assessments.
All right, so they're putting in the work to make sustainability a core part of what they do.
Mm-hmm.
But let's get back to that, elephant in the room, those questionable transactions under the old managing director. They're clearly trying to move on and rebuild trust.
Yeah.
One way they're doing that is by strengthening their whistleblowing policy. What do you think of it? Is it strong enough to actually encourage employees to speak up?
They definitely emphasize confidentiality and protection against retaliation.
Good.
They even say who to report to so employees can bypass the usual chain of command and go directly to the chairman of the board or the audit committees.
Sorry.
Shows they're serious about creating a safe space for people to raise concerns, even if it involves, the higher ups.
So they're trying to empower employees to be the watchdogs, making sure everyone's behaving ethically. But policies are only as good as, how they're actually used. How do we know if this whistleblowing policy is actually working?
That's the million-dollar question. The report doesn't give us any data on how many whistleblowing reports they've gotten or what happened after those reports. Would be helpful to see some numbers on how the policy is being used and if people are actually coming forward.
Transparency is key here.
Absolutely.
Let's hope they give more details in their next reports.
Yeah.
Let's switch gears back to sustainability and their environmental commitments. They're really focused on minimizing their environmental footprint. What are they actually doing to achieve that?
They've set some ambitious goals, reducing their carbon footprint, improving energy efficiency, cutting down water usage.
Okay.
They've even gone a step further and linked their efforts to those UN Sustainable Development Goals, which shows they're trying to align their sustainability strategy with, global priorities.
It's one thing to set goals, but it's another to achieve them. Especially since they operate in industries that can be pretty resource-intensive, like manufacturing chemical products. How do they plan to, square that circle, achieve those sustainability targets while working in sectors that just naturally have a big environmental impact?
That's the challenge, right? Balancing the need to make money with the responsibility to protect the environment. They talk about looking into greener alternatives, investing in energy-efficient technologies, implementing programs to reduce waste.
So a multi-pronged approach, but again, the devil's in the details. What specific technologies are they investing in? How much are they actually cutting down on waste? We need some numbers to really see how they're doing on this front.
I agree. It's easy to talk about environmental commitments, but the real proof is in what they actually achieve.
All right, let's move on to another important part of their sustainability efforts, employee well-being. They say it's a top priority, but their turnover rates have been fluctuating. And it's interesting, executives seem to be leaving at a higher rate than non-executives. Why do you think that is?
It's a weird trend, for sure. Suggests that even though they have policies and programs to promote employee well-being, something else is going on, especially at the management level, something that's making people leave.
Do you think it could be tied to that recent change in leadership with the previous managing director leaving? Maybe some executives didn't like the new direction the company was taking.
Could be. Or maybe it's connected to the fallout from those questionable transactions.
Yeah.
Maybe some executives were uncomfortable with, the ethical situation at the company. And don't forget, they brought in new executives who had never worked in public companies before. Maybe there's a culture clash or a difference in how they manage things.
Hard to say without more information, but it's definitely worth keeping an eye on. High turnover at the top can really shake things up, and it can hurt the company's stability and performance. Makes you wonder about their succession planning, too.
Yeah.
Do they have a plan for developing and keeping top talent?
The report doesn't really say much about their succession planning. It might be something they'll address in future reports, especially with all those changes on the board.
Okay, so we've looked at their financials, their governance, their sustainability, their people management. What's the next layer we should peel back in this deep dive?
I think it's time to look at their industry and who they're competing with. How do they measure up to others in the same field?
Right.
What are their strengths and weaknesses?
We need to figure out where they stand in the market and what their potential for growth is.
Exactly.
The report mentions the tough global economic climate, but it doesn't really get into the specifics of their industry. Would be good to know their market share, who their main competitors are, and what trends are shaping their industry.
And to understand the risks and opportunities they're facing.
Okay, let's put on our industry analyst hats and dig into that next layer of information.
Let's do it.
First, we need to figure out their main industry. Their principal activities are listed as management services and investment holding, but they also have subsidiaries in all sorts of sectors.
Right, like the one that was involved in that glove purchase that ended up getting written off?
Yeah. Seems like they have a pretty diverse business model.
Definitely. Which can be good and bad. It can make them more stable and less vulnerable to any one market, but it can also make it harder for them to really excel in any particular area.
So we need to understand each part of their business and how it contributes to the overall company's performance.
For sure.
And we need to assess each segment's growth potential and the competition they face.
Yep.
Once we have a clearer picture of their industry, we can start to figure out their strategic positioning. Are they in a good spot for growth? Do they have an edge over their competitors? What are their biggest challenges? These are all important questions to consider if we're thinking about investing in Sersol Berhad, or if we just want to follow their progress.
Okay, so we've looked at their financials, governance, their sustainability efforts, how they manage their people, and we're starting to dig into their industry and the competition. What's the next layer we should peel back?
I think it's time to focus on their leadership, the key people running the show.
Good point. Who are these people driving the company? What are their backgrounds, their track records, their vision for the future? The report gives us some basic info about their directors and senior management, but
Yeah, you got to go deeper.
right, we need to understand their experience, their expertise, how they lead, and how all that might influence their decisions and where they take the company. For example, we know they brought in some new directors who've never worked for public companies before.
Right.
Could that be a problem?
It's a mixed bag. Could bring fresh perspectives, a willingness to shake things up.
But there's a learning curve, too. Could be some missteps as they figure out how things work in a public company.
We also know they've had some turnover at the executive level. Is that a sign of instability or just natural change as they win new leadership? Tough to say without more information.
Yeah, true.
Definitely something to watch closely. Strong, stable leadership is crucial for any company.
Agreed. Let's dive into their bio, see what we can find out. Their education, work experience, previous directorships, anything that helps us understand who these people are and how they might impact Sersol Berhad.
Sounds like a plan.
Yeah.
Let's start at the top with the chairman of the board, Leon Lipian. He was appointed pretty recently, November 23, 2023. Anything stand out to you about his background?
He's got a strong finance background, member of both the Malaysian Institute of Accountants and the Malaysian Institute of Certified Public Accountants.
Okay.
And he worked at KPMG, one of the big four accounting firms, before becoming a certified public accountant.
So solid foundation in accounting and auditing. But the report doesn't list any previous directorships in public companies.
Right.
So he's kind of new to this whole public company governance thing. Do you think that's a red flag?
Could be. Definitely a learning curve when it comes to the rules and responsibilities of being a director, but it could also be a good thing.
How so?
He might bring a fresh perspective, a strong focus on financial oversight, which could be really important given what's happened with the company recently.
Fair point. All right, let's move on to Dato Muhammad Sufian bin Awang, an executive director appointed on August 25, 2023. Anything interesting about his profile?
Unlike the chairman, he doesn't have a finance background. Actually, his profile doesn't tell us much at all. Just says he's in charge of day-to-day operations, along with the other executive director, To Boon Ashing. No real insight into his expertise or experience.
That's frustrating. Hard to know if he's qualified without more information. What about his role in the company's financial reporting? The report says he's one of the directors who signed off on the financial statements.
Yeah, big responsibility, especially after those issues with the previous managing director.
Exactly. It'd be nice to know more about how much he understands financial reporting and how committed he is to transparency.
Definitely.
Okay, next up, Alan Ling Si Kiam, a non-independent, non-executive director, also appointed on August 25, 2023. Anything worth noting about his background?
His profile's pretty bare bones, like Dato Muhammad Sufian bin Awang's. No previous directorships, no details about his work experience or what he's good at. Starting to see a pattern here.
It is a bit worrying. Transparency is so important for building trust. It's hard to feel confident about a board when we know so little about their qualifications.
Hopefully they'll give us more details in their next reports.
Fingers crossed. Let's take a look at Tan Tong Lang, another non-independent, non-executive director, appointed on the same day as Alan Ling Si Keong and Dato Mohammed Sufyan bin Awang, August 25, 2023. Seems like there was a big board shakeup that day.
Definitely was. His profile gives us a little more to work with. Says he got his Bachelor of Arts in Business Administration from Nottingham Trent University. At least we know his educational background.
Okay, that's something. But nothing about his work experience or his areas of expertise. Would be helpful to know how he's used that business degree and what he brings to the table.
I agree. Hard to judge his potential contributions without more context.
All right, let's move on to Lim Han Ying, an independent non-executive director. She joined the board a bit later, September 26, 2023. What do you see in her background?
Her profile doesn't mention her education, but it does say she's a member of both the Malaysian Institute of Accountants and the Malaysian Institute of Certified Public Accountants.
So, strong accounting background, like the chairman.
Yep.
Good sign. They need someone with financial expertise to keep things in check and make sure the numbers are accurate, especially after what happened with the company.
Absolutely. Her credentials tell us she's got the skills and experience to make a real difference on the board, especially when it comes to financial matters.
Finally, let's look at Tobun Aching, the other executive director. He was appointed on February 2, 2024, the most recent addition. What can you tell us about him?
Not much, unfortunately. His profile is super short, doesn't even mention his education or work experience, just says he shares responsibility for the company's operations with Dato Mohammed Sufyan bin Awang.
So, 2 executive directors running the company, and we hardly know anything about them. That's a bit of a red flag, isn't it?
It is. Makes you question how transparent the board is and if they're really committed to giving stakeholders the information they need to know if the leadership team is up to the task.
Okay, we've looked at all the current directors. What's your overall impression of this board?
It's a mixed bag. Some have strong credentials and experience, like the chairman in Lim Han Ying.
Right.
But for others, we know very little, which is worrying in terms of transparency and accountability.
And this mix of experience and newcomers to public companies, it'd be interesting to see how that dynamic works out and if they can effectively work together to lead the company through these changes.
Absolutely. The board's makeup and how they work together are key things to consider when evaluating a company's governance and its future prospects.
The report also gives us quick profiles of their senior management team. Think it's worth taking a look.
Yeah, I think so. Knowing the backgrounds of the people who handle the day-to-day operations can tell us a lot about their capabilities and how well they can execute.
Okay, let's start with Tan Phi Jen, the business development manager. What does his profile say?
Says he graduated from Tunku Abdul Rahman College with the diploma in building in 1989. So his background is in construction.
Interesting. He's in business development now. Maybe he switched fields after some time in construction. What about his work experience?
Started as a sales executive in a few different companies. Hunter Products, Supermax Enterprise, Leatat.
So, background in sales and marketing in a few different industries. Could be useful in his current role.
Yeah.
But it doesn't say anything specific about his business development experience or what he actually does at Sersol Berhad.
True. Would be good to know his track record in, creating new business and helping the company grow.
Let's move on to Ms. Tan Shirneji, the finance and admin manager. What about her background?
She also graduated from Tunku Abdul Rahman College in Kuala Lumpur, also with a diploma in building, also in 1989.
Whoa, what a coincidence. Same year, same school, same diploma as Tan Phi Jen, but both in roles that don't seem to match their education.
Looks like they both changed career paths.
Her profile says she started as a contract officer at Sirikat Pembenan Yo Tiong Lei for a couple of years, then became a quantity surveyor at Retni DSR.
So her early career was in construction. A quantity surveyor manages the costs of building projects, so that lines up with her education.
But nothing about experience in finance or administration. Kind of hole in her resume.
It is. Hard to know if she's qualified for her current role without knowing more about her financial and administrative skills.
Okay, last profile. Tan Chuan Thai, another business development manager. Anything stand out about him?
His profile is interesting, says he was appointed way back on March 3rd, 1994.
Wow, over 30 years ago. He's been with the company forever. You don't see that kind of loyalty very often.
True, shows real dedication, but his profile doesn't say anything about his education or any previous directorships. Just says he's a business development manager.
So, a longtime employee in a key role, but very little information about his qualifications or what he's responsible for. Another example of that lack of transparency we've been seeing.
It does make it hard to judge how capable their senior management team really is.
Okay, we've looked at all three members of their senior management team. What are your overall thoughts?
I'm surprised by the lack of detail and the lack of diversity. We're missing crucial information about their skills, qualifications, what they actually do, and no women in senior management. That's concerning.
Especially since they say they're committed to diversity, they need to put their money where their mouth is.
For sure. Diversity at the top isn't just about fairness. It brings different perspectives and experiences to the table, which can only help the company.
All right, so we've looked at their financials, governance, sustainability, people management, key personnel. What's next in our deep dive?
Time to explore their strategy, their plans for growth. Where do they see themselves in 5-10 years? What are their big initiatives? What's their vision for the future?
The report mentions their goal of a recovery year, focusing on cost optimization and pricing strategies,
Mm-hmm.
but not a lot of detail on their long-term growth plans.
Yeah.
Would be good to know their target markets, their new products, plans for expansion.
And how they plan to stand out from the competition.
Right. What makes them special? What are their advantages?
Exactly.
So let's dig into their strategy, see what we can find. We'll look for clues in the financials, what management says, any public statements. First up, this goal of a recovery year. What does that mean, practically speaking?
Means they're coming out of a rough patch, probably related to the economic struggles in 2024 and those internal problems with the last managing director. They're trying to get their financials back on track and start making a profit again.
Okay. But what are they actually doing to recover? They mentioned focusing on cost optimization and pricing strategies, which means trying to be more efficient and manage expenses better. But no details on specific cost-cutting measures.
True. It'd be good to know more about their plans to streamline, renegotiate contracts, or find different suppliers. And how will all this cost-cutting affect their employees and their sustainability efforts?
They need to find that balance between saving money and taking care of their people and the planet. What about their pricing strategies? How are they going to stay competitive in this tough market?
Yeah, the report's pretty vague on that. They say they need to stay competitive, but no details on how.
Another area where more transparency would be helpful. Okay, let's shift to their long-term growth plans. What are they hoping for beyond this recovery year?
They say they want to focus on growing within their core businesses, but what does that even mean? Which businesses are they focusing on? What are their goals?
Right.
They need to be more specific about their vision for the future if they want investors to feel confident.
The report does mention their commitment to using the International Integrated Reporting Framework, which is a good sign.
Yeah.
Shows they're thinking about more than just profit, considering their impact on the environment and society.
Right.
But it's just a framework. The real test is how they actually use it.
Exactly. How will they make sustainability part of their decision-making and their reporting? We'll be looking for that in their future reports.
Okay, so we've covered their short-term recovery plans and their long-term ambitions. But what about the risks, the challenges? The report talks about the ongoing global economic troubles, like geopolitical tensions, unpredictable markets, and the possibility of slowdowns in major economies. Those are big-picture problems they can't really control. What about the risks specific to their industries?
They don't give us much detail on that. It would be useful to know more about the competition they face, potential problems with their supply chains, changes in regulations, and how they're dealing with those risks and adapting.
All right, so we've covered a lot of ground here with Sersol Berhad. We've looked at their financials, their governance, sustainability efforts, people management, key personnel, and their strategy. What are your final thoughts? What should our listeners take away from all of this?
I think Sersol Berhad is at a turning point.
Yeah.
They're facing some tough challenges, but they are taking steps in the right direction, trying to improve their governance, be more sustainable, and navigate this crazy economy.
They're trying to clean up their act and build a better, more ethical future.
But they also need to be more open about how they operate, their strategy, how they manage risk, and the qualifications of their leadership team. They need to show they've learned from past mistakes and that they're serious about being more transparent and accountable.
It's a journey, and we'll see where it takes them.
Definitely.
It's a good reminder that investing in or following a company takes careful research, critical thinking, and staying informed.
For sure.
You can't just believe what they say. You got to dig deeper, look at the details, and judge them by their actions over time.
That's what the deep dive is all about. Helping you make sense of complex information, understand the key issues, and make better decisions.
Thanks for joining us for this deep dive into Sersol Berhad. We hope you found it informative and interesting. Until next time.